I'm Bryce Knorr, Senior Editor of Farm Futures Magazine. Welcome to The Buzz for Thursday, June 6, 2013. Market analyst Paul Bergner joins me to talk about another turbulent week for grain futures. While weather remains the top concern of farmers, at least here in the Midwest, the market also must deal with another USDA report next week. The government updates its estimate of production, supply, and demand on Wednesday, June 12th, and there's a wide range of possibilities, perhaps more than usual. For corn, there's the question of whether USDA will make further adjustments due to late planting. With the prevented planting deadline now passed, farmers face a choice about what to do with unplanted ground. Should they take the prevented planting payment, plant corn late, or switch to another crop, most likely soybeans? And what about yields? The season's first crop ratings pegged 63% of the nation's corn in good to excellent condition. Coupled with late planting, that suggests a yield of 157 bushels per acre. If 4 million acres go unplanted, that could cut production to 13.5 billion bushels, still a healthy total. If all 97.2 million acres go in, the crop is back to 14 billion bushels. Carryout could vary from almost 1.7 billion bushels down to less than 1.3 billion. Then there's old crop corn. Ethanol production remains strong, offsetting weak exports, but stocks could still be up a little. USDA isn't likely to make changes to feed usage until after its June 28th grain stocks report. Paul, farmers had a chance to sell December corn for the revenue protection base price or better this week before the market headed south. What's your take on the acreage debate, and do you think the market can still muster a rally?
Well, I think that the acres will be down. That's the piece that I'm convinced of that part. The numbers that we're hearing are anywhere up to 4 million acres. I'm not convinced of that part of it. My thought on this is that that corn still, for a lot of farmers, is still their most profitable option. And I think that number is going to end up down a million and a half acres. We just have not historically seen that very large reduction. So I think that's part of where we're there. Given that, I think there is still a rally there, but $6 might be a stretch unless we do get that 3 to 4 million acre shortfall, or we get really dry this summer. So I think there's still some room there, but not a lot.
With most of the corn crop in, at least that was going to get in, farmers turned to soybeans, but planting remains 17% behind normal. This week's rains clearly had the market nervous, at least early in the week, which sent November futures above the bearish channel that had kept the market in a downtrend since last fall's highs were put in. Beans appeared to be trying to buy some acres because the ratio of November futures to December corn moved to a new contract high. Still by midweek, prices had pulled back, flirting with both $13 and the old resistance line. Forecasts suggested the next 2 weeks won't be a complete washout, though beans could have some soggy feet when all is said and done. Bull spreaders were out in force in the bean market, buying July and selling November because old crop supplies remain very tight. USDA seems resistant to lowering its forecast of old crop ending stocks much, but could take a whack out of new crop carryout, lowering its forecast of yield due to late planting. If that happens, the agency might trim its forecast of 2013 carryout by 85 million bushels to 185 million. What impact might that have on prices, Paul?
Well, I think that beans might be where some of that best upside is. I think that if we really start to ratchet back the 13 ending stocks already, that really does play a role in putting us into a tight supply situation for another year. Given that this late planning, strong demand that's out there, China's still very aggressively buying beans. We could see some numbers get back up over that $13 range and continue to slide on up higher. So I do see some real possibilities there. And I'm starting to wonder if maybe we're not going to lose a few soybean acres down the road before we get all said and done with the wet weather. So I think there is some real upside in the bean market. We may have to be patient to get there, but I think it's out there.
We'll be surveying farmers next week on farmfutures.com, trying to get a better handle on what some of these acreage possibilities are. Well, usually in June, the wheat market is focused on harvest. Combines are indeed moving north in Oklahoma despite slow crop development. But the big story this week remains the GMO wheat found in Oregon. The mystery of where the rogue seed came from deepened, with suggestions starting to surface that maybe it was the result of sabotage. I discounted this possibility earlier. My wife raised it right away, but sometimes conspiracy theories turn out to be true. Just ask Julius Caesar about that. Whatever the cause, knock on wood, it hasn't had much, if any, impact on the futures market, though cash bids off the PNW slumped. Middle East buyers are starting to enter the market seriously again, and declining crop ratings suggest the winter wheat crop could be smaller than USDA forecast in May. The agency doesn't predict spring wheat production until July, at least based on surveys, but it seems clear acreage will be down in North Dakota. USDA could knock around 40 million bushels off its new crop carryout estimate, though old crop ending stocks could go up a little. So far, prices are holding chart support at all three exchanges. Do you think a harvest low is in, Paul? And what, if anything, should farmers be doing about it?
Well, I'm not convinced that the harvest low is in yet. I think we may see some strength in the market in the short term as harvest moves through what really has been determined to be some of the more difficult wheat conditions in Texas and Oklahoma. But I think when you get into eastern Kansas and some of that, that's when I think we'll finally find that harvest low. There's some good wheat out there in the eastern half of Kansas, and really that's where the big numbers will come from. We're already starting to see some surprises in Texas in terms of some yields that came out a little better than expected. Also, we gave up on some wheat down there. There's a lot of acres that aren't going to come to harvest. So I think maybe we'll see a little bit of a higher prices yet in the short term, but I'm not sure that we're going to get back up to our revenue protection number, which is what I'm kind of sitting back and looking at as a place to look for wheat prices. I think we can sit back, wait a little bit, see what we got for yields, and then do some pricing on out.
Well, thanks, Paul. We'll be back next week with a look at the numbers from the USDA report. Regular Buzz viewers will notice I'm wearing a tie today and just a little makeup too. I just got back from taping This Week in Agribusiness in the Chicago area with Max Armstrong and Orion Samuelson. Be sure to catch the show on RFD TV this week or at farmprogressamerica.com.
We'll have to have more margin now, there isn't any doubt. So you better dash with a load of cash